Yo, what's going on, Latin Wealth family? Welcome to another episode to Wealth Wednesday. Very excited to get into this episode because we're talking about some recent news that's been happening in the world. Essentially, there has recently been a massive global sell-off. Companies in the Magnificent Seven loses more than $650 billion in market cap. And the Magnificent Seven includes companies such as Apple, Microsoft, Google, Amazon, Nvidia, Meta, and Tesla. So we're going to be breaking down what happened, what caused this massive global sell-off. Bitcoin was also down as well. And yeah, it's going to be a very interesting conversation. Before we get into it, Jeremiah, how you feeling today?
Feeling great. Minus all of the news of the financial collapses and all this craziness that's going on, but that's a part of the market. But yeah, we good.
Part of the market. Yeah, it's crazy. So yeah, we're going to get into it right now. Very interesting stories that have been coming out recently and things that have been happening. Obviously, number one, I want to say that the majority of the stories that we cover are related to Latinos, but we have to recognize that events that happen in other foreign countries have a huge effect on other countries, right? So we definitely have to pay attention to that. So, which country has having a huge effect on America? Japan. All right, Japan has had a huge effect on America recently. So we're going to dive into what's going on in Japan. And uh, before we get into it, we break it down. If you guys want a full breakdown on the history of Japan, I would highly, highly recommend that you check out this video posted by Bloomberg. Basically, they broke down what happened to the Japanese economy in the 80s and 90s and early 2000s. Very interesting video when they broke it down in a great way. And I'll link it down below so you guys can check out. But we're gonna basically cover what's been happening the past week or so. And it's also been super interesting because I'm actually out here in Japan. This is the last day that I'm out here the last day, and we're about to head back, and we're recording this, so it's going to be very interesting. So if you guys don't know, for the past 30 years, the Japanese yen has really been in the downward trend due to decades of aging population, weakening yen demand. The Japanese interest rate has almost been non-existent, right? So essentially, this is pretty crazy, right? So what has investors been doing about this, right? There's been a trading strategy called currency carry trade. It's basically a strategy whereby a high yielding currency funds the trade with a low yielding currency. All right. First off, before we break it down, Jeremiah, how familiar are you with this strategy? And is anybody in your circle, were they involved in these trading?
Yeah, so I'm pretty familiar with it. I think I started, it was like 2012 uh, when the Forex craze all started, right? You know, those people that hit your inbox, hey, have you ever like all that craziness, whatever.
Yeah.
So I kind of got ahead of that. I was ahead of that. Got into Forex for a little bit. So started learning about foreign exchange. And this is just one of the strategies that people utilize in that, especially the yen, because the yen, like you said, the interest rate is basically non-existent. So it's plateaued. So you're actually able to use it as a baseline on a lot of your trades. So the way basically currencies react to the way the yen is, and because the yen just stays the same, even better than the dollar. All right, the dollar
Mhm.
strengthens or it weakens, so there's movements in the dollar and in its strength. The yen basically stays the same, so you can tell basically how currencies react or what they do in certain situations based on its relation to the yen, because it pretty much stays the same. So
Mhm.
this has been something that we've seen done or whatever. I didn't stay in Forex because I don't have time to be looking at six different screens
Right.
all night or whatever. But no, most definitely familiar with it. Good strategy.
Yeah, 100%. So essentially what's been happening recently is investors have been borrowing the Japanese yen at an interest rate of extremely low, around 0.5%. They've been exchanging, so they take out the loan in yen, they exchange it to US dollars, and then basically invest those US dollars into crypto, stocks, whatever they want. They make the money on their investment. They turn around, exchange the money back into yen, pay off the loan, right? And oftentimes it's crazy. Investors would basically get free money from the loan. They make money off the loan because by the time they exchange it back, the yen would drop even lower, which is absolutely crazy. So it's crazy. My wife and I, we've been keeping an eye on this because we've been planning this trip out here to Japan. And I looked on July 10th, one US dollar got you around 161 yen, right? Now, recording this on August 6th, one US dollar now gets you 145 yen. So we're going to get into why it dropped. But that's basically the strategy called currency carry trade. And that's what a lot of foreign investors have been doing with the Japanese yen.
I feel like the Japanese yen is something that people have been watching for quite some time. And also, like you said, the aging population of Japan, the fact that there's no more land, it's an island. A lot of people don't know that Japan is basically an island, right? You're just stacking people on top of people. There's all these different factors of things that are occurring. And really, if you really go back and look at it, Japan's economy's kind of shot up after World War II, and they got rid of the whole
Mm-hmm.
negativity and all that that came from that. And then it shot up because of technology. And then, like you said, late 80s going into the 90s, things started to shift and things started to change as, everyone else caught up technologically. And that's when you see America. Obviously, the 90s were great for America, right? And I don't think Japan ever recovered really, because I was looking at some charts and I was like, dang, they've been kind of in this slump since 87. And this,
Yeah.
it's a
Yeah.
little bit of growth, but you don't really see the massive amount of, the companies or
No,
like, it's
it's
weird.
crazy. It's
And
crazy. It's almost like they've been frozen in time.
frozen in time. That's what I was gonna say. It's like a freaking time
Yeah.
cap. Like that's weird.
Yeah.
40 years. Yeah. I
And you mentioned that we both mentioned the aging population, like being out here. That is a real thing you see, man. Like you go on the bus and shout out to the old folks, they still getting around and whatnot, but you don't see too many women that are walking around pregnant. And it's like if when there is a child around or a baby around, the people just huddle around the child, they embrace the child, almost like it's rare to see one.
Yeah. And I mean, you know, longevity in the age wise, we've talked about it several times, but we read it in our group, whatever, with blue zones or whatever whatnot. Japan has that in Okinawa. So they live longer, but the actual birth rate is shrunk. And so what you have is a whole bunch of aging people, right? And when you don't have youth, also think about this, with youth comes innovation, comes new
Mhm.
ideas, comes new trends. Who is it that's bringing things, from other countries? And you see that, like, look at Korea. Korea has K-pop, right? Because they have a
Mhm.
very vibrant young generation that goes and learns other music and like there's all these different things that comes and that's implemented when you have youth. And when you don't have it, you're stuck. Like you said, you're frozen in time, and a lot of the ideas and the things that go on, they stay in that same mindset. Imagine this. Imagine if, right, Generation X was the youngest generation, like the
Mhm.
massive, most youngest generation in our country. Think if the millennials weren't around. There's no Facebook, there's no MySpace, there's none of like social media wouldn't exist the way it is without millennials, right? And a generation Z
100%.
took it to the next level of influencers and all those things. But when you don't have those people of that age, you don't have those ideas, you don't have that creativity. So you're stuck with old ideas,
Yeah.
which means no
Mhm.
new money, no new anything. And I think that's one
Yeah.
of the biggest issues that we see in Japan.
And 100%. Something else I want to bring up is, we think of the word inflation as it's a negative thing, but a little bit of inflation can be healthy, right? Because now cost of things going up, people get paid more and things of that nature, which is has not been the case in Japan.
Stagflation, and a lot of people don't know
Stagflation,
what
yeah.
that means, but you get stuck in a stagnant position. You don't go up or down. You just stay the same. That's not good for anything at all because there's always money to be made on the upside or the downside, right? If you're shorting something, then there's money to be made on that side, which that influx of money could then be poured back into the economy, or if it's going up, great. Everybody's making money, that's good. But if things are just staying the same, man, everybody's stuck in the same place essentially, and that's seemingly
Yeah,
that's
100%. So yeah, like I said, my wife and I, when we were planning to come out here, we were looking at the currency exchange rate, and we were like, it was like 150, 155, and then it hit 160, and we're like, yo, this isn't gonna keep going. At some point, the government or the bank is gonna have to come in, and they're gonna have to do something about this, right? They don't want their yen to continue to weaken. And so they recently did. The Bank of Japan recently voted to increase the short term policy rate target from about zero point 0.5 to 0.25%. And they want to continue to bring that rate down to a range of 0% to, yeah, they want to bring it down to basically 0%. Um, so what that basically means, the yen strengthened, the yen is becoming stronger and the US dollar is weakening. So what happens, again, going back to the currency trade, carry trade that we broke down, investors are forced to quickly sell off their assets to pay back the loan, right? So if your dollar is weakening, you're losing money. So what people are forced to do is they got to sell off Nvidia, they got to sell off, whatever they're holding, Bitcoin, to turn around, exchange that money into yen, and then to pay back that loan. That, in a nutshell, that's basically what's been happening the past couple of days.
your basis has changed, right? Remember what I said? You take the yen and the yen, you base that off exchange. Well, the exchange, the foreign exchange, right, or the currencies are what go into the various different stock markets. You've seen Taiwan stock market affected. You've seen China. We even saw in the European Union. So these
Europe, yeah.
currencies are all being affected, right? Because your baseline has changed. If the yen has been at the same thing for the past 25 years, then it's the baseline. So when the
Mhm.
Japanese, when the Japanese lawmakers and when the actual basically the Fed for the Japan goes in and changes that and says we want to strengthen the yen, okay, that totally shake things up because now your baseline isn't the same. That's what I'm saying. Now you can't make those calls. You can't get those derivative decisions in the stock market that you were going to get because it totally changed the entire baseline that you have now. Now everything shifted. I got to get my money back. I got to sell off Nvidia. I got to sell off any of the stuff that I have because now I need that money back, pay back loans. I'm stuck. And then if it
Mhm.
goes up, now I'm upside down and I'm getting money now, selling additional, like you said, selling additional security certificates and getting more of my stock because now I have to pay back more than what I actually borrowed. So that's yeah,
Mhm.
that's it's an overall view of it, and it sucks.
A hundred, yeah, 100%. And people are like, well, if the yen dropped from whatever 156 all the way to 145, 144, that's not a huge drop. But when you're investing hundreds of millions of dollars, that's a lot of
That's
money
huge.
that I
That's
need to I need
huge.
to get back.
Yeah, that's huge. What are you talking about? 13, like literally, if you're ever in Forex and maybe people have never been in it, but literally you have calls and puts, and man, that stuff could change like 0.01 or like
Mhm.
0.05, and people were making calls and making tons of money just off that little bit of movement, pips, different pips they call it. But like, so imagine 1,000 times that. Like, yeah,
Mhm.
that's a lot
That's
of money.
insane.
That's
Yeah.
a huge change. Yeah.
Yeah. So massive sell off, causing a lot of fear. And I think you mentioned 1987.
Yeah.
They recently experienced their biggest loss since 1987.
Yep.
So pretty crazy, causing a lot of fear in the market, a lot of fear with investors and whatnot. And Bitcoin was down 12%. I think it's also interesting that gold was at the peak was only down around 2%. So that's the one that,
That's,
didn't move
but
as much.
I mean, but at the end of the day, you have to think about commodities. So precious metals are always going to be what solidifies
Yeah.
what is the basis for most currencies, right? So you can't change the thing that basically is the foundation for all currencies minus ours. I don't know. We went away from the gold standard in the 70s, but it's what basically I can take this currency, this amount of currency, and get this much gold. So
Mm,
a lower change or a very small change in gold tells you that that's good because that means the majority of the actual currencies and the economies in the world are pretty stable. That means that it's not
mm,
something that's extremely major, and that's something you can look at as an indicator of how bad things are. When you see massive increases in gold, or if it should drop like crazy, then there's something going on, which we saw gold that was
mm,
growing like crazy previously earlier in this year. We saw all-time high.
100%.
Yeah.
And what else was crazy is Warren Buffett selling off Apple. All these different events, they're kind of small stories, small events, but they all equate to a massive sell-off, right? It contributes to the fear that's causing in the market. So Warren Buffett and his company, they have reduced his holding by half. And this happened, what was it, maybe last Thursday or Wednesday? Just
Okay.
impeccable
Yeah.
timing.
Yeah.
So yeah, I mean that happened as well.
I mean, it's funny because I said that to you and I said it to somebody else, and I told him because he was like, "Oh, my investment, my retirement plan is Apple. I saw this guy, such and such." And what I told people was, it's like, it's all about timing. Like this has been a trend for Apple. We've been talking about this. You and I, like literally, we've been
Mhm,
highlighting Apple. Apple has
mhm,
lost its way, and
mhm.
it's been
So yeah, okay,
some
okay,
time
okay. So
now.
yeah,
Yeah,
yeah. I'm saying like he kind of like played on the hype maybe recently of, you know, and then okay, I don't know if this is in a, you know what I'm saying?
yeah. I
Now,
could.
what I mean the hype is like they had earning calls and then they had those announcements with the updates and all that. So that's what I mean the recent hype.
Yeah, I don't. I think that just me studying Warren Buffett, and he's definitely like a hero when it comes to investing, probably the greatest investor ever. Um, and just studying him and his movements, he always sees trends before they're there, and he does things like this, and people don't pay attention to it. I just think that if you really look at Apple, something's wrong, and it's
Mm,
been wrong for quite some time. I don't think it's hype. I think he's serious. He sold off, was it Capital One, Bank of America as well. Like he's before banks started having issues, probably about like 8 months before the banks started having issues with like First Republic and those banks started falling and people started
mm,
calling and pulling their money out of banks. He sold off a huge chunk of his portion of his stock that he had invested in banks. So I don't know. I look at it and I'm like, I kind of already saw that a little bit because I haven't seen anything from Apple that's
mm,
I just haven't.
mm.
Nothing this year has really impressed me at
Yeah,
all. And I'm not an Apple person, but I
yeah,
mean,
yeah.
you said the same, and I've heard like multiple Apple people be like, "Bro, I'm not really, I don't know." And so I think maybe we should pay attention to it because maybe Apple's always going to be good, but because they're
Mm,
so big, massive. But I think it's something that he saw. I think it's a trend that he saw, and he's playing to it, and the market itself doing what it's doing. You want to have
mm.
massive cash reserves so you can jump on opportunities, whether it be
Very true. That's a good
buying
point.
companies, mergers and acquisitions, all kinds of stuff. So
100%. September 18th, the U.S. interest rate they will have a final decision on what they're going to do with that. So that's something else to keep in mind. And then also we have election coming up as well. So the reason why I bring up those 2 points is because with reading all these articles and with everything going on, of course, the R word comes up, recession. Are we going to be in a recession? I think it's a little, in my opinion, it's a little too soon to see if we're going to be in a recession. I think we have to see how some of these things play out. But yeah, those are two other things to keep in mind. I think
you
that
don't
would be
think
a huge determining factor.
you don't think by definition we've been in a recession?
I think for sure by definition we've been in one, but it's like no one wants to say it.
I mean,
I
I
don't
get
know.
it. I get it. I get it. They'll start saying it. They'll start calling it that in 2025. After
Mm.
whoever gets
But do you
elected.
think, yeah, after, you think it depends on who gets elected,
Yeah, I mean,
or does it matter?
I I'm not a politician, but I think we all know very easily who's getting elected.
Yeah.
Call it what you want. I don't like him. I don't vote however, whatever, but that's dang near impossible that that person's not getting elected. And he will call it a recession. He will
Mm,
because of who was his predecessor, and that's where the blame will go.
mm.
So I look for them to start calling it a recession, and he's going to be the great savior. So,
That's what it is. That's exactly what it is.
yep.
That's what it is. Okay. All right. Good information. Anything else you want to hit on before we get up out of here?
No, man, I would tell people, I made a little reel on or it's not a reel. I made a TikTok video, whatever it's called.
Mm.
I don't know, whatever. I'm behind, guys. I'm old. Okay. I'm old. So whatever you call those videos, I made one. And what I said was, hey guys, if you're jumping into this game, I know that everybody's thinking to do this, to jump into investing. Maybe, 3 or 4 episodes ago, we gave some breakdowns of stocks and just places you should probably
Mm,
invest in and look at to start things off. Take your time. Get with someone that actually does this on the real basis, like they're licensed to do so, and they can walk you through how to actively and do it safely. So that way you understand what you're getting into. I've seen way too many stories all over the internet. People putting massive amounts of money into crypto, massive amounts of money into stocks, and just losing everything. That's not the way to invest.
hmm
That's not how you do it, right? It's dollar cost averaging. It's,
hmm
every single month, every paycheck put in $50, little, like that's the way you do it. And you do that over time and you build up and and you get to where you want to go and you achieve your goals. But just massively trying to throw a massive amount of money because everyone's doing it or however, whatever, don't fall into that hype. Like get with someone that's going to help you out. That's what I would just say. Like we always say, do your due diligence, but have someone help you do your due diligence. That's what I would say.
100%. I love that. Wise words. They couldn't have said it any better. Yeah, that's it from us. If you guys enjoyed this episode or learned anything about what's going on in the economy, we would appreciate if you share this with one other person. And I will link the episode that Jeremiah just referred to down below. And I'll also link the video to Bloomberg that's kind of breaking down the history of the Japanese economy and whatnot. All of this affects us. It affects Latinos. So definitely got to pay attention to these stories and whatnot. And with that being said, it's the Live One family. We'll catch you on the next one. Peace.
These guys.